This is such a proud unit of Cirrus research. I want to give you a quick update from the Global Positioning Report. This is a quarterly report that looks at cross-market fundamentals. So we look at key markets, key regions, Europe, US, Asia, China, etc. And in this report, we make valuation comparisons. We look at growth rates. We look at forecasts. A couple of things that jump out in this report. One, we do believe that most of the forecasts for growth appear to be overstated. And as a result, given the sort of slowdown that we are beginning to witness, first of all, it's still very early in this transition. And two, the likelihood that we are going to continue to see interest rate pressures suggests that these estimates have to come down more across the key regions. In this report, we center this, though, on two key markets. One is the UK. Given the sort of sluggish growth we expect there, we're really surprised by the comparisons. And two, the exception to the rule in terms of performance this year, one key market is India, and we want to walk through some of the excesses that we're observing there. So let's jump into it. The first chart here reflects really a couple of key things: top line growth versus the forecast for forward earnings. And in this comparison, what you're witnessing, first of all, the blue line represents the changes in estimates for the forward year. What you'll notice is that those estimates are coming down, but they're well above normal if we end up getting into a much more sluggish world of growth. The other reality check here is the top line growth is juxtaposed to this, and what it shows is that the slowdown is just beginning to start. So we do believe in the quarters to come, the downside pressure on earnings will remain really as a result of earnings misses. So we think playing defense in the UK is especially paramount. Another key point is if you look broadly across regions in terms of performance, clearly a lot of key markets are in a bear market structure. But take a look at the standout for Q3. India is up 15% when a good amount of the critical parts of the globe are down and down sharply. When we look at the fundamentals of India, what we're finding is that these are like basically small versus large cap valuation curves done with z-scores. So basically, the purple dots here represent low discounted valuation comparisons. Take a look at, however, at the exception India, where the adjusted valuations for small to large caps are basically well above what we're seeing in every other market. And more importantly, the absolute valuations in India also looks rich. Something to consider as we're looking to position here in a world where there's a global slowdown coming. Take a look at the report. I think you're going to find plenty of interesting details there, but focusing on the UK, India, I thought were really a good start. Thank you.